Good afternoon, I'm Brigid and this is Currency Wars. Right, this week, Eskom's load shedding has caused havoc for both the South African households as well as businesses. A study by the Free Market Foundation back in 2012 showed that the potential loss of GDP associated with the 8% unmet electricity demand amounted to a deterioration of anywhere between 2.5% to 5% of GDP. The prospect of load shedding continuing into next year could potentially wipe out the growth in South Africa in 2015. Meanwhile, the IMF has lowered its 2015 economic growth forecast for South Africa. That's from 2.5% to 2.1%, citing depressed consumption expenditure amidst tight financial conditions. And they report that this will not be enough to lower the unemployment considerably, as structural reforms are essential to generate more growth and jobs. Meanwhile, the Chinese forecast for growth next year is expected to decline to 7% from 7.5%, and benign growth is expected from Europe and Japan. The knock-on effects can be expected in the United States, and potentially putting those rate hikes in the Fed out to much further. Meanwhile, the OPEC slashed its 2015 demand forecast for oil by another 280,000 barrels per day yesterday, and the forecast is now over 1 million barrels per day lower than it is currently. This has served to exacerbate the negative fundamental perception around the oil price, and this has sent Brent crude tumbling another 3.9%. The commodity is now trading below the $65 a barrel for the first time in 5 years. Right, now that we've seen the lay of the land, I'd like to welcome my guests today, John Cairns from RMB and Danny Pienaar from Micromega. Welcome, guys. So let's have a look and see where we're going into 2015. Obviously, we've had a massive blow-off in terms of the rand, the cross rates particularly as well because of the rand's underperformance. Are we at a tipping point? And that's the big question. So I'm going to ask you first, John.
I don't think we are at a tipping point, but definitely sentiment in the market is very negative. We had the key break of the 1139 resistance level. We've gone up there, and there's more event risks. I mean, you've got ECB, the Fitch rating, Fed next week, and then in late January, you've got the Fed and the ECB. So potentially a lot of things there. Sentiment's very sour. Easy to see the rand running further. And
your view, Danny, where are the big risks?
I think the big risks are already out there. You know, John said he doesn't think we're at the tipping point. I think we're already past the tipping point. For me, I think dollar rand is under immense pressure. I'm actually surprised that it's trading so well. Someone asked me yesterday, why is dollar rand here? And I thought they meant, why is it so strong? Because if I look around the market, we have a lot of event risk around dollar rand at the moment. You mentioned it in the opening, that the Eskom power cuts, how that affects GDP. The main reason we're getting downgraded is because we don't have any growth. Yeah. So going forward, apparently there's no end in sight for the electricity situation. So I don't think dollar rand is much to hold on to. I think that we're looking for topside levels to break through 11.75. I'd be looking for 12.25 early next year.
You know, the interesting thing for me as well is if we're looking at this market as we see it at the moment, I mean, we've really seen commodity-based emerging markets hit the hardest. And obviously the rand's also performed the worst, basically on the back of all the sentiments around Eskom, etc., and the growth forecasts. How do we fund this deficit? In a market where you're relying on your commodity-based as the export sector in order to rebalance this economy, what else do you do other than structural reforms? So what are the answers going into 2015? We've got the budget. I think the budget potentially could be a massive risk, potentially if we see these continued load shedding scenarios emanate towards the beginning and the first quarter of next year. What is your view in terms of as we go into 2015? Are you of the same view as Danny that the rand potentially is still overvalued even at almost 11.60?
Well, it depends what you mean by overvalue, but let me just come back to that current account data quickly. You mentioned this imbalance. It's quite interesting, the revisions that were contained in the quarterly bulletin. There's a number of factors that have changed that really suggest the rand should be much weaker than you would have previously thought, you know, based on the SARB's numbers. So I'll just mention two quickly. The current account deficit. Previously, they had said that in 2007, South Africa was running a 7.5% current account deficit. Now it turns out the estimate is 5% of GDP. Now, that's way back in history, but it's important in the present context because when we've got a 6% current account deficit, you can always say, well, hang on, back in 2007, we handled a 7.5% deficit. That's not true anymore. We only managed to handle a 5% deficit. Now we've got a 6%. So 2013, 2014 current account deficits, actually the worst on record for South Africa. Secondly, terms of trade really deteriorated much faster than we expected. You mentioned commodity currencies under pressure. Obviously, that's oil, and we're an oil importer, which is a different story. But generally, for the past 12 quarters now, our terms of trade, our export prices have been coming down. And then actually I'll mention the third one is the export and import performance. Based on the previous SARB figures, export volumes were up 8% year on year in the first half of this year, which is a really good performance. Import volumes were 0. So we are looking there and saying, hell, the economy,
let's rebalance.
The economy is rebalancing. Exports are doing well, imports are contracting, which is the economy responding to pricing signal. Suddenly now, the figures are exports are up only 2% in the first 3 quarters of the year as they revised the figures downwards. Imports, admittedly, have also been revised downwards. They contracted 2%. But the gap between export growth and import growth is really no longer looking as it was, meaning that the rebalancing is much slower than we thought.
That draws into question, because we talk about the inflation forecast, we look at the growth forecast. So we almost in this, well, it's pretty much stagflation, right? So we don't have the growth. We've got this potential for continued inflation, or inflation sitting up at the top end of the band. Yes, the oil price is going to offset some of that. So thank goodness for that. And if we saw the CPI number out yesterday, predominantly that 0.1% was as a function of the petrol price being lowered. However, the problem really is we're seeing on the flip side is China's growth deteriorating. So now you've got Europe, you've got Japan, you've got China, which is potentially going to go down to 7%. Where's this demand going to come from? So how do we see this kind of rebalancing continuing, especially in an environment where the rand is continuing to rally much weaker with regards to other emerging markets? Therefore, it really does put pressure on our import side of that equation. So that then causes the reverse in terms of the rebalancing. So what is your view in terms of where we're going to go to on the rand from here?
To be honest with you, I think the rand weakening is a good thing for the country. I know people don't view it that way. I think dollar rand at 12.5, 13 fixes the imbalances a lot quicker than anything else. In South Africa, we have a stigma where we want the rand to be strong. You know, it's almost like we want our rugby team to win or don't want the soccer mob to drive into us. Those kind of things happen. And the rand at 12.5, 13, I think is good for the country. I think imbalances will fix itself very quickly. It is expensive to import labels. It is expensive to, as John mentioned, import contract. I'm not sure whether we can believe a lot of figures that come out of the SARB. They keep changing them. 2 years ago, 5 years ago, we weren't actually at this number. Are we at that number? So Treasury and the SARB really have to pick up their leadership for me, and going into the new year, as I mentioned, I think dollar rand will be at 12.25, if not in January, by the end of January. I think the dollar rand's on a bigger weakening path. Our GDP is going to suffer. I think globally GDP will suffer. I think inflation is benign globally. So that's the one good thing for the rand. I think interest rate hikes from the Americans will come at a lot later stage. So there will be a bit of free cash around. But just in general terms, the local story is not good, and now the offshore story is not good because commodities are under pressure. So our exports might be higher, but we're selling them at a cheaper rate. So we do need dollar rand to weaken either to fix that, or you need commodities to rally, and then the rand can come back to a better level. Now, I'm not saying the rand will always be at 12.5, 13, 14. But how else do we fix the current account deficit? How else do we get government to stand up, take leadership, and go, we need to correct the spending in this particular area?
But Dan, you say the SARB should take leadership. Leadership maybe in terms of hiking interest rates, right? If we're not getting the export and import adjustment because of the rand, which you would expect, the only other way to get this current account balance down
is foreign inflows.
No. Well, foreign inflows, but also dampen consumer demand by hiking rates. I mean, we think it's a real mistake that they didn't hike in the last few meetings.
Well, and again, you know, we say that the SARB hiking rate will affect GDP going forward. I don't think it really makes a difference. I think GDP is negative anyway. You know, if you look at the power situation, if they hike rates and we get better yield and we get more investment, obviously that encourages a couple other things. So I agree with you. I think they missed an opportunity. I don't think they'll hike, to be honest with you. I think they're under pressure from where they're not supposed to be, but from a socio-political point of view, I don't think they can afford to hike rates. I think this morning it was mentioned the middle class of South Africa has become more resilient, but the lower end of the band is becoming more militant. You know, so if they hike rates and people haven't got jobs, we've got 8 million unemployment, which we know is not really a number. How do you create all this? Government, again, has to take the lead here. They can't just keep spending money in the wrong areas. They've got to create something.
Well, that's the thing. And I mean, we can draw our conversation back to the Eskom debacle, because that's really front and centre right now. As a South African, I mean, we all know the lights are off and people are at home, so it's not a great scenario. You know, you're sitting, and business particularly, I mean, you look at restaurants, you go to restaurants, you can't go to a restaurant, you can't go to a hairdresser, you can't, you know, just general business in December that's supposed to be booming, and opportunity in South Africa has been hampered because of these load shedding issues.
And it's worth remembering what happened the last time, or the first time we had the load shedding, January 2008. If you remember at the time, the rand really came under a lot of pressure. You might not see it if you look at a dollar rand chart. If you look at euro rand, I mean, euro dollar was moving at the time. So we really saw significant weakness there.
Well, sentiment driven by, if you look at a country and you say, well, they can't switch the lights on, we'll switch it off for them, or blow out the candles.
Right, now that we know where we stand and the real risks and opportunities, we're going to pull out the big guns. So let's have a look with the levels on the rand as they currently stand. We've spoken about OPEC, we've spoken about commodities, we've spoken about the Eskom power cuts. We've also spoken about the potential for interest rates to remain low, possibly for an extended period into next year. What do you think with regards to your views, particularly around the cross rates and the dollar rand? Dan, if you'd start.
On the rand, for me, I know I've been very bearish and not festive at all, but I do think there'll be pullbacks. We've seen some seasonality this week. Last week, Monday, we had a 17-cent pullback on the back of nothing really yet. We had it yesterday, and this morning, dollar rand was trading slightly better. So I do think you'll see the pullbacks. The overall outlook for the rand, though, remains negative and bearish. I think by the end of December, I'll be looking for 11.75, 11.80 on the top side. In the next week, I think we won't get back below sort of 40, 43. So I'll be looking to buy dips towards 45, 47. Looking for a top side break of 58.60 to test that 75 level. On the crosses, I think euro rand and sterling rand very much similar. I think, as John mentioned, ECB is coming out. I do think they'll talk up not hiking rates, and they might look at some more QE. So that might help the rand and the crosses in the short term. But again, we're looking for 7 or 8 cent pullbacks to get involved in that, because going into the new year, the prospect remains pretty bleak.
For weakness. Anything quickly to add, John?
Yeah, so more or less the same view as Dan, a little bit more optimistic. I put those support levels a bit lower, maybe down at 11.40. December has historically always been a great month for the rand, but we do need to, particularly, I think, for me, the big risk is the Fed next week. We've got to get through that. If the Fed doesn't change the language, then maybe dollar rand can come through that support level.
Okay, so in conclusion for the week, the trading strategy really is to look for dips in the dollar rand. If you're an exporter, this is the market for you. Don't get involved too quickly, because potentially we could see rand above that 12 level. However, in the short term for the month, Danny's looking for 11.80 on the rand, potentially looking for buy or dip levels around 11.40 for importers, and potentially that break of 11.60, 11.65 opens up that 11.80. And then obviously watching your cross rates quite closely, looking for sort of little bit of a 10-cent dip to buy the euro dollar, or the euro rand and the pound rand, and looking for higher levels as well. Unfortunately, not a festive message. However, I wish you all a fantastic festive season ahead. And please remember to send us any of your questions or comments to @CNBC Africa, #CurrencyWars410, or myself @Brigid R. Taylor for your personal responses to the FX markets. Until next year, have a wonderful festive season and good luck in the trenches.